The pre-owned property market in China's big cities has seen something of a rebound. More than 18,000 second-hand properties were sold in Beijing last month, around 50% more than at the same period last year. That marked the highest transaction volume in 20 months or so. In Shanghai, 27,000 properties were traded, the most in more than 3.5 years. Guangzhou and Shenzhen also saw transactions rise to 11,000 and 7,000 respectively. Peter Churchouse is Managing Director of Portwood Capital, a Hong Kong-based economic and markets analyst specializing in real estate.
The change of ordinary to non-ordinary is quite significant, particularly from a tax point of view. Non-ordinary housing typically tends to be housing that is larger, about 1,500 square feet, 145 square meters, and you pay a much higher tax when you transfer the ownership of that property after you've had it for a couple of years. You'll be paying an income tax, a capital gains tax, a VAT. Now, the rules are being changed so that the tax regime will be the same for these non-ordinary houses as well as for ordinary houses, which are much smaller and which now have a lower tax on them. So what this will do is potentially save big money for people who are selling a larger unit in China in these big cities. It could save them $120,000 in taxes on the transaction of a sale of a property of that size. So this could be quite significant in terms of trying to generate more sales transactions where people will not have to pay such high taxes. So it can be quite significant.
New home prices rose faster in November. The transaction volume of new housing and second-hand housing purchases increased. I mean, let's look at the figures. They are edging up 0.36%. The previous month, 0.29. I mean, it's hardly stuff to open the champagne on, is it?
Well, put it this way, we've seen the property bubble in China really started to burst in 2021, really instigated by the government, who saw that this was a property bubble and really needed to have the air let out of the balloon, we might say, the consumers of property. As a result, we've seen 3 years of decline in the property market in China, dramatic fall in the volume of sales, both in the primary market and in the secondary market. And also we've seen, depending on whose numbers you look at, they vary quite a lot. But if you look at the National Bureau of Statistics, they indicate across the country, property values have decreased across the country by about 10 or 12% since 2021. In many of the smaller cities, people will argue that it's much more than 10%, and figures of 20 and 25% are more true in some of these smaller cities. But across the country, it has been a big decline. There's produced a lot of debt problems with the property developer community. That's problems for the banking system. So it has had a very significant impact on the financial conditions in China by cooling the property market and killing that property bubble that we saw in the 2020 kind of era.
There's been a prolonged downturn in China's property market, clearly a drag on the world's second largest economy. Do you think it is fixable?
I think basically we're getting to the point now where housing is more affordable because prices have come down a bit, incomes have gone up a little bit, so affordability is better than it was. We've seen 2 or 3 months now where volumes are picking up, and there is some hope that that will continue into the early part of next year, leading to a more stable situation in the property sector.